Tonight, tens of thousands of Afghans at risk because of a catastrophic data breach that the government tried to keep secret. But thousands more were left to fend for themselves as the Defence Secretary says sorry for the blunder.
It may have occurred 3 years ago under the previous government, but to all those whose information was compromised, I offer a sincere apology today on behalf of the British government.
An independent review found the leak posed a limited additional risk, but the Taliban reportedly confirmed tonight that they have been tracking people down. Tonight, I hear from one man still in hiding who's urging the government here to arrange an emergency evacuation. Our conversation coming up. Also coming up, we'll be live in the city with the Chancellor set to call for less red tape and more risk-taking. We'll bring you Rachel Reeves' speech live. Plus, inside the world's biggest biobank and why the detailed scans of 100,000 people could help doctors detect disease. That's all coming up on The World with me, Yalda Hakim. Good evening. I want to start the programme tonight with a government cover-up and a secret operation to bring thousands of Afghans to the UK. It began back in 2022, 6 months after these chaotic scenes during the fall of Kabul. Many Afghans who risked their lives to work alongside British forces had become targets for the Taliban and had gone into hiding. And then a spreadsheet containing the personal information of nearly 19,000 people was inadvertently leaked by a British official. The Ministry of Defence estimated up to 100,000 people could potentially be at risk. Activists described the breach as bone-chilling, effectively a potential Taliban kill list. And that's why officials began the process of relocating 6,900 Afghans without explaining why. That included 1,500 people whose details were made public and their dependents. But that's not where it ends. If you do the sums, it's clear thousands of Afghans were left to fend for themselves.
The RIMA review notes the passage of time, nearly 4 years since the fall of Kabul, and concludes, first, and I quote, "There is little evidence of intent by the Taliban to conduct a campaign of retribution against former officials." He concludes, and I quote, "It is highly unlikely that merely being on the spreadsheet would be the piece of information enabling or prompting the Taliban to act."
Well, those were the findings of an independent review, but that doesn't chime with the experience of one Afghan man who told me today that he regrets ever working for Britain. For him and thousands of others, this is just another layer of betrayal by a country that doesn't keep its promises.
We are left behind. Since 2 years, we are waiting for evacuation. UK, please keep your promise.
We'll hear more from him in a moment, but let's get started with this report from our Security and Defence Editor, Deborah Haynes.
Chaos in Kabul when the Taliban returned to power. Many Afghans fearing for their lives wanted to flee. The UK offered some who'd worked with them the chance to move to Britain to avoid Taliban reprisals, but an official involved with the scheme accidentally sent an email with a list of almost 20,000 applicants to addresses outside a secure government network. A major data breach that happened back in 2022 and is only now being revealed after the lifting of extraordinary and expensive reporting restrictions requested by successive governments.
Mr. Speaker, this serious data incident should never have happened. It may have occurred 3 years ago under the previous government, but to all those whose information was compromised, I offer a sincere apology today on behalf of the British government. And I trust the Shadow Defence Secretary, as a former Defence Minister, will join me in this.
The blunder may have put lives at risk and is forcing ministers to relocate almost 7,000 Afghan nationals. And these are individuals who would otherwise not have been eligible for that kind of support. They're in addition to many thousands of Afghan nationals and their families who already did qualify to be relocated to the UK. This all comes at a time when immigration is an increasingly controversial topic, and government finances are under significant strain. The Ministry of Defence says the total cost to the taxpayer of all Afghan relocations is set to be around £6 billion. But even that figure will likely rise, as a legal firm is preparing a class action lawsuit over the data breach. And of the 1,000 people that you're representing, how many of them are still in Afghanistan?
Approximately 25%. We receive regular emails from our clients to say that they're in hiding. If anyone knocks on the door, they don't open. They have to keep changing their address where they live, and they live a very unstable life because of that.
We spoke to one Afghan whose name was included in the mishandled list. He'd already resettled here in the UK because of his work with British forces, but is worried for friends still in Afghanistan whose data has also been compromised.
There is no safe for them. They can't walk freedom or freely relax on the city, nothing. They all hiding,
The UK hid its mistake behind a rare super injunction. With that now lifted by a High Court judge, the true price of this disaster is finally becoming clear. Deborah Hain.
Well, earlier I spoke with one of the Afghans whose names was leaked in the data breach. We're not identifying him for his safety, but I began by asking him how he reacted when he first found out. Have a listen.
When I saw this one, so I just completely lost. I completely lost my mind. I just think about my future, my families, my all colleagues they are left behind. Especially my family have got the kids. All my family are years. They are completely gone in danger. So we are right now from today. I didn't realize that I heard about this leaked of documents, information. So when I received today about my case, so I totally lost. I just lost. I thought my family is lost. I lost my family. Even I lost my life. So totally, I'm just completely lost.
And we'll be bringing you the rest of that interview a little later in the programme, so do stay with us for that. But for now, we'll soon take you to Mansion House in the city where the Chancellor, Rachel Reeves, is about to speak. She's set to announce a mortgage shake-up that the government hopes will boost home ownership and cut red tape. Let's speak to our data and economics editor, Ed Conway. And Ed, just tell us a little bit more about what we're likely to expect from this speech.
Yeah, that's right, Yalda. This is kind of one of the big moments in the annual timetable for the Chancellor. This is the moment that she addresses the city and talks about what's going on in finance, decides whether there's any changes she wants to make to financial regulation. But in a sense, all of that is to some extent overshadowed by obviously what's been happening in recent weeks with the Chancellor, with that moment in the Commons, obviously, a few weeks ago, with what happened to markets, with the black hole that she's facing in the public finances. So I think a lot of people are going to be focusing even more, less than on the kind of regulations themselves, and even more on just what's her demeanour, what does she say in reference to that supposed black hole that people are talking about? Does she talk about any tax rises that are to come? Because everyone knows that they're likely to come in future. And actually, I don't want to give too much away because I'm sure everyone's excited about the speech itself. But we do already have some of the details of what she's going to talk about. So I've seen the speech itself. It's no longer embargoed, so I can talk a little bit about it. And she does say that she's, in reference to those events, she says she's proud to stand here and address you for a second time at Mansion House as the Chancellor of the Exchequer. So there's a moment there where she's kind of reaffirming this is the job that she wants to do. She talks about being committed to her non-negotiable fiscal rules. But in a sense, Yalda, what's more interesting than the announcements that she's going to make tonight is what hasn't actually happened. So a lot of people speculating that there were going to be changes to the ISA set of savings rules. So obviously we have these ISA rules. They say you can invest £20,000 a year in cash. Some people thought maybe the government was going to change those, get rid of those, reduce the amount that you could invest in order to try and raise a bit more money from tax. That's not happening. So there's no change to ISAs. Some people were wondering as well whether there was going to be a bank levy. So the bank levy the banks pay at the moment, whether that was going to be increased, and there was going to be a quid pro quo for that. So there was going to be extra changes in financial regulation, and as a result of that, banks would have to pay more in taxes. That's not happening either. So two of those things are the dogs that haven't barked. What she will talk about a lot is what she is calling the biggest change or the most far-reaching financial set of package of reforms to the financial services regulation in more than a decade. She's calling them the Leeds reforms. There's a whole host of different things here. Capital requirements are being changed. There's reforms to ring fencing. That does matter quite a bit. Streamlining the senior managers and certification regime. Some of this stuff is important. Some of it is less so. I think the key thing most people will take from this, and in terms of, for what it means for you if you're watching at home, wondering about your mortgage, perhaps the most significant thing is there's going to be a change, and this is actually more the Bank of England than the Treasury, a change that means that there will be more higher loan-to-income ratio mortgages available. So anything that over 4.5 times your income, that stuff has been quite hard to get hold of in recent years. There are changes from the Bank of England, really, more than the Treasury, that should make it more easy to get hold of those higher loan-to-income mortgages. So those are the main stories here. I would say, having read through the speech already and looked at the details, and again, like I say, don't want to give it too much away here, don't want to ruin the suspense, but this is not quite as dramatic as some people were expecting. And I wonder if that speaks to the fact that you've got the Treasury and the Chancellor who are just kind of waiting right now. They've had this extraordinary rollercoaster over the last few weeks. It has changed everything when it comes to their plans for the public finances. They know they're going to have to raise taxes. They know it's going to be tough. And they know there's going to be a lot of unpopular stuff. And they're not quite starting. They're not quite embarking on that quite yet because they know there's tougher stuff yet to come. That's my speculation. But in terms of the text of the speech, they say it's very far-reaching. I'm a little bit sceptical about that because we heard exactly the same thing from Jeremy Hunt a couple of years ago in the same Mansion House speech, the most far-reaching set of reforms we've ever heard about. This time we're hearing that from this Chancellor. We'll have to wait and see whether it actually has an impact.
Yeah, and Ed, as you say, an important moment in her calendar, and we are expecting her to appear any minute now. But like all of these dinners, it seems that they are running over. But as you say, she's had a tough couple of weeks, especially after what happened in the Commons, where she was seen visibly upset and there was so much speculation about her future. So her body language, her level of confidence will also be assessed alongside what she says. And one of the things that, and again, as you say, we don't want to give too much away, but bits and bobs have been coming out. And alongside some of the sort of reforms you're talking about in terms of mortgages, there's also a big push by her calling for less red tape and for less sort of regulation, because she's saying that impacts innovation.
It's right, and one of the messages that the Chancellor certainly has been keen to drum in recent months, really, has been about growth. It's about trying to generate growth. Remember, this government came into office saying that it wanted to have the strongest growth rate in the G7, so stronger than other countries around the developed world. Hasn't really, actually, there was one quarter, certainly earlier on this year, when it was pretty strong. But for the most part, people, they've gone a bit quiet about that. But the focus in this speech, the focus in previous speeches has been about what can we do to kind of change regulations, to remove regulations, to make it easier for people to invest, to try and drive growth in the economy. And I think we're going to hear more about that from the Chancellor. The other thing to kind of note is, as well as the Chancellor, you have the Bank of England Governor talking tonight as well. I don't know whether we're going to see that, but that's a key thing as well, because we hear from the Chancellor, we hear from the Bank of England Governor. And one of the things that he, I know is talking about, because again, I've had a read of the speech, is about what's going on with tariffs in the US. And obviously, Donald Trump has imposed these tariffs. A lot of people wondering what that means for the global economy. And one of the things he said is that there's a kind of message, a subliminal message here, which is that Donald Trump, as well as imposing these tariffs to try and reduce the amount of imports that are coming into the US, he needs as well to look at his own public finances and try to improve them so that he doesn't have as big a deficit, which is, a little bit of a subliminal kind of discomforting message, I think, coming from the Bank of England governor. And so you have that on the one hand, the fact that a lot of people in that room that are at that event will be thinking, we are going through this massive economic step shift at the moment where, we've talked about this before, Yalda, haven't we? Where you have a US president who wants to change the multilateral order that we have around the world right now, who wants to not just kind of re-look again at what NATO does, but look again at the nature of free trade around the world. This is massive stuff, which really overshadows a lot of the day-to-day economic conversations that we have. And yet no one is entirely sure what Donald Trump's next move is going to be. In the UK, we have this trade deal with the US, or an agreement, perhaps is a better word for it. But right now, it still means that we're going to be paying more tariffs to send stuff to America. And globalization, as we know it, is starting to fracture. The world that we have become used to over the course of the last few decades, since, really the turn of the millennium, is changing. And that affects finance, but it affects all of our lives as well, because it means your ability to get stuff from China or elsewhere will potentially change. And it means our ability to earn money might potentially change as well. So all of those things happening kind of in the background. And as I say, the one person who does refer to that in the speech tonight is the Governor of the Bank of England, Andrew Bailey. Rachel Reeves, though, slightly more cautious, championing the fact that the UK has this deal or this trade agreement with the US, talking about the fact that the FTSE 100 is up to a new record today, so things are looking relatively good on that front. But slightly less kind of voluble on the fact that a lot of people look at the UK and they worry that businesses around the world, they're not listing their shares in the UK in the way that they used to in the past. They're not investing in the UK in the way that they did in the past. They're nervous about this country and putting more money into it right now because of all sorts of things that go back multiple governments recently. And so far, you haven't seen a massive change to that. So it'll be interesting to see whether she really addresses that or not.
Yeah, absolutely. And as soon as she does appear to begin that speech, which we are expecting any minute now, we will be going live to Mansion House and to you for more analysis. Ed, thank you so much. Let's return now to the thousands of Afghans being moved to Britain in what was a secret program after a massive MOD data breach. Earlier, we brought you part of our interview with one of the Afghan victims of that data leak, who we're not identifying for their security. He also told me about working with British forces during the war. Have a listen.
I've done everything for the British forces, not for my family, just work for the British people, armed force. I regret that why I put my family in danger because of that. Is this justice? We work for British, we help them, so now we are left behind. Right now, and from today, I don't know about my future. Maybe this is my last voice. You can hear my family, even my friends. Maybe tomorrow or day after tomorrow, I don't know what's going to happen with me, with my families, my kids, my children. I'm worried about my future. Tomorrow, what's happening for my families?
Were you expecting to be evacuated, and were you expecting to seek asylum in Britain?
So we are expecting that we are work with the British. So many times we applied for that, then they are send us the negative emails. Rejections. Lost lots of friends and colleagues in Kabul, Afghanistan. You know about this. This is the truth. This is the real truth. Even they are lost my friends, my colleague. They are losing their father, brothers because the Taliban ask, where is this guy? Who this guy work with the British force? He is hiding right now, but they are torture their brother, father. So find this guy. So these emails right now, they are completely, but we are confirmed we are dying. We are dying because the Taliban now received our address, our phone number, our Tazkira ID, everything they got.
Have you spoken to other colleagues? Are they in a similar situation? They've received information as well that their details has been leaked. Have you spoken to anyone else?
Yeah, I spoke to my friend, but they said we all received the same email. But some of them said, not all of them. Some of them, they said we all received the same email, the same message. So this is regretting message. This is totally. I'm just saying, totally. They are confirmed. The British confirmed we are dead. My family is finished. My family is finished. So I don't know. I kindly request from the British government, even from His Majesty, the King of United Kingdom. So please evacuate us from Kabul, Afghanistan. Maybe tomorrow we will not be anymore. Our kids will not anymore. So we will finished. Please help us.
Can you just tell me what you're most worried about right now?
The most worried is that when we receive that emails, we are totally lost. I said before that we are in bad situation. We just turn off the lights. Everything is with the last. We are sitting there. So if the door is knocked by anything, we will lost. But we don't know about the future. Even tomorrow, I swear, I change my house. I swear.
And what do you think you'll try and do now?
Try that. We are request from the human rights for the British government, from Ministry of Defence of British, United Kingdom, the His Majesty Kings. Please, we need the emergency evacuation from Kabul, Afghanistan. Please.
That was an Afghan who says that his information had been leaked, that he'd received an email about it, and now he faces a great deal of uncertainty. Well, you're watching The World with me, Yalda Hakim. Ahead on the programme, we will bring you, of course, the Chancellor's speech as soon as it happens, and we'll have more coverage of the Afghan data leak. Stay with us for that.
I'm Stephen Murphy, and I'm Sky's Ireland correspondent based here in Dublin.
The waters of Ireland and Britain should be home to great white sharks.
If there are great white sharks in this area, there's no reason they wouldn't come here to feed. It's basically a buffet on a beach. This could be not only a record-breaking storm, but potentially the most dangerous storm ever to hit Ireland.
Our app gives you the very best of Sky News wherever you are. Breaking news, videos and analysis.
Evidence of the crisis.
Podcasts, watching us live.
Live here from Washington.
Wherever you get your podcast.
All in one place. And all at just the touch of a screen. The Sky News app. Get the full story first.
We are under Israeli military restrictions in terms of some of the things that we can film, but it's important to be in there. What a slow drive for the president as he approaches his golf club. 4 more years! Free wherever you get your news. I'm Mark Stone and I'm Sky's correspondent based here in Washington, D.C.
Welcome back to the programme. You're looking at live images from Mansion House in the city, where the Chancellor, Rachel Reeves, is about to speak. She's set to announce a mortgage shake-up that the government hopes will boost home ownership and cut red tape. Well, let's bring in our data and economics editor, Ed Conway, who is joining us now for more analysis. And Ed, we're running about 15 minutes late, aren't we? We were expecting her to speak at about 9:10, but like all of these dinners, she's running a bit late. But we are looking at these live images of Rachel Reeves right now ahead of this speech. And you've seen the speech, and we've already started to see some of the key takeaways come out. But just talk our audience through, some of the key highlights of the speech for you.
Yeah, and there she is. You can see her. She's talking. She's sat next to the chief executive of Barclays, Venkat, who has, I think, also been advising the government on various of its reforms. And this is what you're looking at here. You're seeing inside one of the most important moments in the City of London's calendar. This is when we get the Chancellor, obviously we know, you can see we're expecting that, but also the Bank of England Governor addressing the great and the good of the city. And this is one of those things, those traditions that goes back, I don't know whether it's hundreds of years or thousands, but we're talking in this case about a long tradition. And this is kind of the moment traditionally where we get a speech that's a little bit more about, OK, these are the financial regulations I want to impose. So it's not like a budget, but she's saying, here's how we're going to make it either more easy or more difficult to try and get a mortgage or indeed to save. And so in terms of some of the things that I think a lot of people have been speculating about, they've been wondering, is the Chancellor going to change the ISA rules, so individual savings accounts, to make it harder for people to put that money kind of tax-free into their savings? £20,000 is the limit right now. Some people wondered whether that was going to go down. Well, I can tell you that's not happening. So she's not taking a knife to the ISA scheme. She's not also, she's talking very happily there to the chief executive of Barclays, and I'm sure he's relatively happy about what's there in the speech, if indeed he's aware of it, because some people are wondering whether the banking levy, so it's one of the big taxes on those banks like Barclays, whether that levy was going to be raised. It's not going to be raised, so that's not happening as well in this speech, but there are changes that will make it easier for bankers to hire people, and it will make it easier for them to run their accounts. It's known as capital requirements. And I think, Yalda, what's kind of interesting about this moment, so I can remember quite vividly actually being in the Mansion House. So this is happening in the Mansion House. There's a gala dinner. Every so often journalists like us are allowed in. And there have been all sorts of moments that were quite famous from this speech, this event in recent years. I think one, I can't remember precisely when it was, but Mark Field, who was a city minister, was accused of assaulting some protesters. There were some protesters, I think environmental protesters, who got in a few years ago, and Mark Field, who was a city minister, tried to kind of get them to sit down rather roughly, and I think lost his job afterwards or resigned. So, and the one that I can remember, I think was either 2008 or 2009, so in the midst of the financial crisis, and the Deputy Governor of the Bank of England, Sir John Geeve at the time, had basically lost his job that night, and so it was incredibly dramatic. And one of the things I was tasked with doing as a journalist was running around to try and get a reaction from him. So I was scurrying beneath the tables you see there, trying to get some sort of a comment from the Bank of England Deputy Governor, who was about to lose his job. And so traditionally, this is one of those kind of gala moments where you have the pantomime of the city, the Lord Mayor addressing the event, and more to the point, sometimes the Bank of England and the Chancellor saying, well, listen, here are the rules that we're going to impose on the financial system. And if you think back to that moment, 2008, in the midst of the financial crisis, in the wake of that, you had a lot of rules that were basically saying to banks, you need to just run your balance sheets in a more sensible way. So have more capital, so more shares up against all of the lending you're doing, and just be a little bit more cautious. Well, what's interesting, I think, about what we're going to hear from the Chancellor tonight is she's talking about slightly reversing that, saying it's not all about caution, it's also about lending, and we want to make it easier for you to lend. And you can see the festivities are now kind of getting towards the climax. There's the Lord Mayor of London there in the middle. And I think you can just about see the Bank of England governor to his left as well, so on the right, but one of Rachel Reeves. Should we listen in?
The Exchequer, the Right Honourable Rachel Reeves, Member of Parliament for Leeds West and Pudsey.
Thank you. Thank you. Lord Mayor, Governor, ladies and gentlemen, my thanks to the City of London Corporation for hosting us here this evening, and to the Lord Mayor for his address, as well as to the Economic Secretary to the Treasury for all of her hard work. It is a year now since my party was elected to office, and a year since I was appointed as Chancellor of the Exchequer. Recently, on a visit to a primary school, a young girl said to me, "If you could have any job in the world, what would it be?" Now, given the events of the last few weeks, I suspect many of you would have sympathised if I had said anything but the Chancellor, but I didn't, because I am proud to stand here tonight and address you for a second time at Mansion House as the Chancellor of the Exchequer. This evening, I want to talk about the progress that we have made over the past year, restoring stability, securing investment, and delivering reform. And I want to talk about the future, the economy that we are building, the opportunities that we are seizing, and the prosperity that we together are creating. In my May's lecture last year, I talked about how a resilient economy must be built on security. And the importance of that security has been brought into sharp focus in recent months. As the world changes before our eyes and global economies are becoming more uncertain, the job of a responsible government is not just to watch that change. We must step up, not step back. We must build a dynamic economy on strong and secure foundations, where success is not limited to a handful of sectors, a few people, or certain parts of the country, but where the rewards of hard work are shared, harnessing the contribution of every part of Britain. This is the foundation of an economy and a country that is more active and more confident, where people and business look to the future and talk about hope, talk about opportunity, assured of their own capability and the ability of our country to boldly face the challenges ahead, and certain in the prize when they succeed, of higher wages and higher living standards, the renewal of Britain in every home and every high street. To put it simply, a Britain that is better off. Now, the financial services sector is absolutely critical to my ambitions for our country. It is one of the largest and most successful sectors in the UK, worth around 10% of total economic output, and supporting 1.2 million jobs in clusters right around the UK. In Cardiff and Belfast and Edinburgh, where we have growing fintechs. In Manchester, where BNY Mellon have their new Angel Square hub. And in London, the financial centre of the world. And financial services is also critical in people's everyday lives. Whether that's a couple looking to buy their own home, a budding entrepreneur wanting to start their first business, or people getting more out of the money that they are putting aside for the future. And that's what these plans that I will set out tonight deliver. Growth must be built on a platform of economic stability. When we came into this office, it was this government, that restored Britain's reputation as a beacon of stability by putting the public finances back on a firm footing, getting debt on a downward path, while investing prudently alongside business. That was and still is, the right choice. Because there is nothing progressive, nothing Labour, about a government that simply spends more and more each year on debt interest instead of on the priorities of ordinary working people. And fiscal stability is a choice that reflects economic reality. National debt remains at its highest level since the 1960s, and globally the cost of borrowing has increased in recent years. Now, it's not the inheritance that I would have chosen, but it is the reality. And that is why the Prime Minister and I and this government remain committed to our non-negotiable fiscal rules. The stability that we have restored is already delivering. 4 cuts in interest rates by the Bank of England since the general election, reducing the cost of mortgages and of business lending. Real wages up by more in the first 10 months of this Labour government than they increased by in the first 10 years of the previous Conservative government. And investment is returning to our economy. At the spending review, I set out £120 billion of public investment over the next 5 years. And last month, the Prime Minister confirmed that the UK had attracted £120 billion of private investment in just the last 12 months. In a globally competitive market, firms all over the world are choosing to invest right here in Britain as one of the best places to start up, to scale up, and to list. The FTSE is at an all-time high, today for the first time ever, breaking 9,000 points. London is home to the deepest equity capital market in Europe. It is the 3rd biggest venture capital market globally. And the London Stock Exchange is the most international in the world, with the FTSE soon to include shares listed not just in sterling, but also in dollars and in euros. Last year, to ensure that the UK remains competitive, we made significant changes to the listing regime. For example, relaxing dual-class share rules to give founders flexibility to pursue their growth ambitions. The FCA have today published their final prospectus rules, simplifying the listing and capital raising processes for firms of all sizes. And as I committed to last year at Mansion House, we are delivering Pisces, a brand new type of stock exchange for private company share trading, with the first trading events due to take place later this year. And I'm announcing a new listings task force with the Office for Investment to attract the best businesses in the world to IPO here in London. But we must do more to ensure that British savers benefit from the success of growing British businesses. Last year at Mansion House, I set out an overhaul of our pension system. And the Pension Schemes Bill, led by my colleague, the Pensions Minister, will be signed into law in the next few months. The creation of defined contribution and local government pension scheme mega-funds will mean larger and more powerful pots of funding invested productively across the country. Pension funds and this government are united in our determination to deliver higher returns for savers and more investment in the economy. That is why, since last year, funds covering the majority of defined contribution market have committed to the Mansion House Accord, pledging to invest at least 10% of their main funds into private assets, such as infrastructure and growth markets, with at least half of that going into UK projects. And I would like to congratulate the Lord Mayor on his employer pension pledge. I am delighted, Lord Mayor, to see businesses including Tesco, First Group and Octopus making this commitment. And like you, Lord Mayor, I look forward to seeing many other companies joining up. The UK economy is enhanced by its outward-facing approach. And this year, we have built on that with our new trade deals. A trade deal with the United States, where we were the first country to sign a deal so that British businesses are better protected against tariffs, and where we have worked with our G7 colleagues to avert new taxes. I'm pleased to welcome US Securities and Exchange Commissioner Hester Peirce here tonight, who is driving forward proposals for greater digital collaboration between our 2 financial centres. Thank you for being here. and a trade deal with the European Union, where our strategic partnership will slash red tape and reduce costs for business, as well as providing a platform to further deepen our relationship in future. And I'm pleased to welcome the European Union's Financial Services Commissioner, Maria-Louise Albuquerque. Maria-Louise, we met earlier today with the Economic Secretary to the Treasury to discuss our continued cooperation on financial services, and I look forward to working more closely with you. And a trade deal with India too, with whom our recent FTA agreement will give Britain the best trading relationship of any country in the world with India. And we have concluded the first economic and financial dialogue with China in 6 years. And we are implementing the Bern Financial Services Agreement with Switzerland too. At the G20 in South Africa later this week, I will continue the call that I made at the IMF spring meetings for countries to come together to tackle trade imbalances and drive growth, underpinned by stronger multilateral institutions. And I look forward to hearing more on this from the Governor in his address. And I would like to congratulate him on his recent appointment as chair of the Financial Stability Board. A testament, Andrew. A testament to both Andrew's commitment and this government's commitment to international standards. Britain is open for business, open for trade, and open for investment. And that's why we must be willing to change how we do things to stay competitive in the global economy. We have ripped up the planning rules. We've swept away regulations. And we have published our industrial strategy. And today we can go further by announcing the Financial Services Growth and Competitiveness Strategy, including my Leeds reforms, named after one of the UK's great hubs for financial services, and the city that I have been proud to represent as a Member of Parliament for the last 15 years. These are the most wide-ranging package of reforms to financial services regulation in more than a decade. At Mansion House last year, I said that we must regulate for growth, not just for risk. We're delivering today on that commitment, while continuing to protect financial stability, so that the benefits of a thriving, growing financial services sector can be realised for people all over Britain. Let me set out the details of that package in 4 parts. First, I am rolling back regulation that has gone too far in seeking to eliminate risk. Second, I am delivering targeted changes in the areas where the UK already has particular strengths. Third, I am making changes to capital requirements to unlock more productive capital. And fourth, I am introducing measures to boost retail investment so that more savers can reap the benefits of UK economic success. I will begin with the biggest reforms. As I promised last year, I am delivering the most significant reform to the Financial Ombudsman Service since its inception, including proposals to limit for 10 years for claims. This will speed up the time it takes for consumers to get redress for their complaints, returning it to its original purpose as a simple, impartial arbitration service and ensuring that it no longer acts as a quasi-regulator. And I welcome the announcement today made by the Financial Ombudsman Service that will reduce the interest rate it applies before a decision from 8% to base rate +1. I am introducing new targets for the FCA and the PRA to cut times on authorisations and approvals. And I have tasked the FCA with assessing the impact of the consumer duty and whether it unduly affects wholesale activity to ensure that regulators are really regulating for growth. And I'm streamlining the senior managers and certification regime, reducing the burdens it imposes on firms by 50%, and slashing approval timelines so you can bring in talent to your business more quickly. My next set of reforms provide targeted regulatory support for the areas where the UK does already have a comparative advantage. For insurance, where Britain is the destination of choice for underwriting complex, specialised and high-value risk, I am introducing a new competitive framework for captive insurance. For asset management, Where the UK is the world's second largest centre, I am future-proofing the regulatory regime and will publish draft legislation in early 2026. For sustainable finance, I am determined to focus our efforts on policies that matter most to our world-leading sector and support investment in the transition. So after consultation and consideration, I have decided not to pursue a green taxonomy, but instead work with the regulators through the Transition Finance Council to capitalise on the £200 billion opportunity of the global transition to net zero. And for fintech, where almost half of Europe's fintechs are already based here in the UK, the PRA and the FCA are launching a scale-up unit to support innovative firms to grow in the UK, including in our world-leading payment system. And I will drive forward developments in blockchain technology, including tokenised securities and stablecoins, and an ambitious design for a new digital gilt instrument, so that UK financial services can be at the forefront of digital asset innovation. And because I believe that the UK is the best place in the world for financial services, today I've announced the Office for Investment's new concierge service. Launching by October this year, it will provide a tailored service to companies considering setting up or expanding in the UK. And I'm grateful to Chris Hayward from the City of London Corporation for his work to drive this forward. Thank you, Chris. Now let me turn to the changes I'm making to capital requirements to allow UK banks to do more lending and release more capital for investment into our infrastructure and into our businesses. First, I am supporting the Bank of England's decision to raise the asset threshold for MREL requirements to between £25 and £40 billion. This will benefit the challenger banks and bring increased competition and innovation to the market and support those businesses to expand their footprint here in the UK. Second, I am confirming our approach to Basel 3.1, implementing lower capital requirements for domestically focused banks from January 2027, while preserving flexibility on our approach for international banks to ensure that the UK always remains competitive, whilst aligning with international standards. Third, I have committed to meaningful reform of the UK's ring-fencing regime, recognising that now is the time to go further in tackling inefficiency and boosting growth, while retaining the aspects of the regime that support financial stability and protect consumer deposits. And fourth, following the new growth-focused remit letter I sent in November, I welcome the Financial Policy Committee's announcement that it will review the overall level of bank capital needed for UK financial stability, reporting back to me by the end of this year. The review will inform the work that the Treasury is taking forward with the bank to ensure the prudential framework strikes the optimal balance to deliver resilience, growth, and competitiveness. And I welcome the recent changes the Financial Policy Committee has announced to the loan-to-income limit on mortgage lending, which the PRA and FCA are implementing immediately. That means tens of thousands more people could be able to get a mortgage in the next year alone, with Nationwide already offering its Helping Hand mortgage to more first-time buyers, supporting alone an additional 10,000 each year. And my thanks to Dame Debbie Crosby for her leadership. Thank you, Debbie. My final set of reforms are based on improving savings investment. I recognise the potential for ISA reform to improve returns for savers and access capital for UK businesses. I have confirmed that long-term asset funds can be included in stocks and shares ISAs, allowing long-term ISA investors to benefit from this innovative product. And I will continue to consider further changes to ISAs, engaging widely in the coming months, and recognising that despite the differing views on the right approach, we are united in wanting better outcomes for both UK savers and the UK economy. For too long, we have presented investment in too negative a light, quick to warn people of the risks without giving proper weight to the benefits. And our tangled system of financial advice and guidance has meant people cannot get the right support to make the right decisions for themselves. So that is why we are working with the FCA to introduce a brand new type of targeted support for consumers ahead of the new financial year. And I welcome the campaign to promote the benefits of retail investment, which will launch next April, and the action to look at our current approach to risk warnings, and that will report back in January. I'm grateful to Chris Cummings of the Investment Association for spearheading both of those initiatives that I know will make a difference. Thank you very much, Chris. Today, I have placed financial services at the heart of this government's growth mission, recognising that Britain cannot succeed and meet its growth ambitions without a financial sector that is fighting fit and thriving. The reforms that I have set out this evening are the next chapter in how I intend to support this growth. And I thank Gwyneth Nurse and her brilliant team at the Treasury for all of their hard work on this package. Thank you, Gwyneth. I knew that Gwyneth would get the biggest clap. I am also pleased to have been able to work in lockstep with our regulators. And I want to extend my thanks both to Nikhil Rati and Sam Woods for their innovation and the work that they have done in response to my updated remit letters last year. Thank you, Nikhil, and thank you, Sam. We have been bold in regulating for growth in financial services. And I have been clear on the benefits that that will drive, with a ripple effect felt right across all sectors of our economy, putting pounds in the pockets of working people, getting better deals on their mortgages, better returns on their savings, and more jobs paying good wages in all parts of our country. As I look ahead, it is clear that there is more that we must do. In too many areas, regulation still acts as a boot on the neck of businesses, choking off the enterprise and innovation that is the lifeblood of economic growth. Regulators in other sectors must take up the call that I make this evening, not to bend to the temptation of excessive caution, but to boldly regulate for growth, in the service of prosperity for our whole country. I'm really proud of how far we have come in the last year as a government and as a country. I know that the changes that we have made will reform and transform our economy and our country. And I know that you will waste no time in seizing the opportunities that lie ahead, to build a stronger economy, to deliver the renewal of Britain, and to make working people in all parts of Britain better off. Thank you very much.
You were listening there to Rachel Reeves talking about the fact that Britain is open for business. She was specifically targeting that speech at reforms to the UK's financial system, and she talked a lot about the uncertain global economy. We're going to have much more analysis in a moment. Now, we've only got a few minutes left on the programme, but I'm just going to return to the revelations today that thousands of Afghans are being relocated to the UK after a data breach by the Ministry of Defence, which put people at risk of Taliban reprisals. Let's bring in now Matt Simmons, founder of Bridge to Unity, which offer support to people arriving in the UK as refugees. Matt, I'm so sorry, we've only got a couple of minutes left following that speech, but I just want to get your take on this data breach, because I spoke to a young Afghan man who is currently terrified. He's living in hiding with his family because he's discovered that his information has been leaked.
Yeah, it's absolutely horrific, and we knew this was going to happen today. Our phones, our team's phones, have been going bananas. People are reaching out from Afghanistan, from Pakistan. There's Afghan families here in the UK that are worried about their families still in Afghanistan and what this data breach means for them.
And have you been speaking to a lot of people who are facing this level of uncertainty? Do they know what they're going to do next?
No, I don't think they do. And I think there's a little bit of lack of understanding about the emails they're receiving from official channels. And they're reaching out to independent caseworkers that have been working, supporting individuals and families since 21, and reaching out to organisations like ours, just looking for some clarity on the situation.
Yeah, and unfortunately, we've only got a few seconds to go. But Matt, I'm so grateful for your time, and we will try and get you at another point to speak in more detail about this developing situation. Thank you so much.
Okay, no worries.
Well, that's all from me and the team from The World. We're back tomorrow night at 9 o'clock. Good night for now.